These are three very common sources of investment by people, especially our parents or grandparents. How have they performed? Poor, very poor performance, right? Not even average actually. Average, you're trying to be modest. It's actually a very poor performance. So being a person from a newer generation, somebody who is aware about it, you will not take decisions on investment just because our parents said so. You have mind to think. You have analytical mind. You will analyze, you will look at these reports. Make sense? Now, how many of you think still, Ankit, stock markets are very volatile? Stock markets are still very volatile. I am comfortable with fixed deposits. I am comfortable with something else, at least to some extent. Gold, okay, whatever. Now here is another slide for you. If you think stock markets are too volatile. Ready? Everybody, I want your attention. I do agree with you. What kind of chart is this? It is annual performance of Nifty. What is Nifty? Nifty is an index of National Stock Exchange, NSE. It is just a weighted average of top 50 companies. Just like a body temperature, if you want to see how 5,000 stocks of Nifty is doing, it's very hard to do. So they have done is they have arranged about top 50 companies, and the weighted average of those top 50 companies is shown under this index called Nifty. Right? When you say that, okay, Nifty is up 200 points, it's only those the weighted average of those 50 companies has gone up or gone down. It's not the entire market. All right? So yes, we can see, while fixed deposits can give maybe 5 to 7% of a return, consistent return year after year, but stock markets cannot. There are times when stock markets gave you negative returns. From here it is not visible, but one of the years stock markets gave 85% return in 1 year. Let's say big numbers. Let's say you have 1 crore rupees and you invested. End of the year, your passive income is, from your passive income, you just got 85 lakhs in your account, 85% return. It will take like 7-8 years in FD or even gold. But there is a year when you invested that money, by end of the year, you would have lost 35 lakhs or 35%. It has also happened. So stock markets looks like it is a matter of chance, getting your job, which year you have that extra money in your account, because that is when you will start. If market crashes right after this, you are in soup, isn't it? So I got another slide for you. Now, yes, stock markets are volatile, isn't it? However, if you start looking at stock market in a longer span, what do I have here is Nifty return over a period of 10 years. It's a running average or a moving average. So like today I'm calculating an average of last 10 years. Last year I would have calculated another previous 10 years. All right. What do you see? You see a behavior which is as consistent as a fixed deposit. Do you see every green bar? Every bar which is above 0? So statistically speaking, in India and even abroad, stock markets if you have invested for any span of 10 years, doesn't matter which year you start, but if you have invested for 10 years, you have never taken a loss on your principal. Your bank in which you have an FD might have gone bankrupt. Gold might have been stolen, but you have never lost money in stock markets if you have invested for 10 years. So by that principle, can I say stock markets actually are less volatile as compared to fixed deposit? Everybody? I hope I have made my point. Okay. So that is the life of an investor. Now the question is, okay Ankit, from your previous slide it looks like that it's really good to be an investor. Am I right? Do I have attention from everybody? What do I see on slide? It says, should I trade or invest? Isn't it? Should I trade or invest? What do you think? Invest? Both? I'll show you some data and then you can decide what works for you. Now, over a period of last 20 years, do you know what is CAGR? Compounded annual growth rate. Nifty has given a 15%, a whooping 15% CAGR over last 20 years. I'm sure you might have heard about it. Have you heard about it, that Nifty has given more than 50% CAGR? Do you know what is CAGR? It is compounded annual growth rate. If you have invested 1 lakh rupees in stock market, 15% means you will have 15% more by end of the year. So annually stock markets have grown by 15% year after year for last 20 years, which is almost double of fixed deposits. Can I say that? Almost double of fixed deposits. Now I want you to read section by section, all right? So I want you to pay attention to first section. Let's say you guys are very young right now. Let's say that you have a stable job by 25. Now you are earning a little bit more. You already got your first bike and all that. Now you have a little bit extra money. All right? Let's say that you start investing. How much you want to invest every year? 5,000, 10,000. Am I right? Also, till how long you can invest? For how long you can invest? You can invest as long as you are ready to work in an active job. Technically speaking, a person works for more than 35 years. Right? You get a stable job by 25, you work all the way to 60. That is 35 years. Am I right, ma'am? Technically, people work for almost 35 years. That's the definition our parents used to have. None of us decide to work more than 45 or 50 years. Am I right? Most of us want to go for at least second inning, try something else. Yes, no? How many of you want to retire early? You have not started your job, okay? Are you Kavi? Hi, okay, hi, nice to meet you, Kavi. Okay. So what I've done is, instead of 35, I have put 25 years. Can you see that on the top, everybody? Hello, can you see on the top, what I put here is 25 years. So if stock markets can replicate same CAGR, everybody, if stock markets can replicate same CAGR of 15% for next 25 years, trust me, next 25 years for India is going to be better and bigger than what was past 25 years. Every country, every major economy in the world is aging, not us. Not us. Okay? We still have a huge young population like you. So we are actually, it seems that we may actually grow faster, but let's take a conservative guess of 15%. For next 25 years, I'm going to give you a retirement plan at 50. That works? Now let's say you invest 10,000 rupees per month and you increase it every year by 10%. So this year you invest 10,000, next year you invest 11,000 and so on. Do you understand that? In 25 years, you would have invested about 1.1 crore. You would have invested about 1.1 crore, and if you would have just invested in some stocks passively, like you have never looked at it, I bought some Reliance, HDFC Bank, ITC, or you would have bought something called index funds. Index funds is a group of stocks which track indexes. Like if index has 25% weightage for HDFC Bank, they will buy 25% of HDFC Bank. Just like index funds they work, okay? Just like indexes they work. You would have a whooping 6.6 crore rupees with you. When you are 60, you will have a whooping 6.6 crores right in your pocket. Are you with me? And it is much better than fixed deposit, not just in terms of the amount of money you have, plus also in terms of taxation, because you will have a long-term capital gain, which is right now taxed at 10%, while fixed deposits money can be taxed at your income for the year. So you will make a lot more here. Now this is first case scenario where you have just invested. Now what is the second case scenario? Somebody said when I was about to start the session, mutual funds. Mutual funds is a very popular choice. Am I right? Is a very popular choice, mutual funds. Have you ever heard about mutual funds, sir? Right? Now mutual funds have a secret or hidden fee. Do you know they charge almost 1.5% every year? Do you know that? If you have 10 lakh rupees worth of capital invested as a mutual fund, suddenly end of the year 15,000 will be gone out of it. So what I've done here is, even though markets have grown at 15%, because of their 1.5% of cut, they can give you a return of 13.5%. They can give you a comfort because of their advertisements and actors coming and talking about it and all that, but literally you actually get a lower return than market in mutual funds. If you would have done same investment, 10,000 increase, 10% increase, 25 years, you would have made 5.3 crores, which means you would have paid a fees of 1.3 crore to that mutual fund guy over 25 years. Right? Our parents used to invest in fixed deposit. Next level used to invest in mutual funds. You are a level ahead. So no mutual funds for you, at least not a lot. Okay, a little bit is fine. Now let's look at the third more interesting category. This is where I find myself, and this is where I want to take each one of you. Let's say you want to do a combination of investment and trading. Investments can still give me 15% return. Investment can still give me 15% return. If any of you have traded, is it easy? Is it possible to make 1% return a month as a trader? It's not a big deal, okay, 1% a month as a trader. What I have put here is even more conservative. Let's say that annually as a trader you have only made 10%. I have taken even less than 1% a month, when usually people make 1 to 3% a month as a passive income trader, not without leaving your job. Okay? Again, go with the same calculation, 10,000 increase. How much money have you made by end of 25 years? It is 6 times more than 6.6 crores. It is about 36 crores. So, if you can start early, if you can start thinking about learning how to trade, it doesn't have to be big flashy what they say and share on YouTube, right? This month I have made 5 crores, 50 lakhs, 50,000. No, just try to make a little bit money. Try to add up to your investment, what you are already doing. By end of 25 years, when you retire, you will be an ultra HNI. You will be an ultra HNI. In India, definition of HNI is 8 crores. That's it. You will be an ultra HNI with 36 crores right here. How many of you think it is interesting discussion? It is, right? So now let's understand, now let's dig a little deeper, how markets really work. If you have traded, I'm sure you know markets are not easy. Am I right? If you have ever traded, you know markets are not very easy. First slide, you gave me a definition that stock markets is like a vegetable market where people buy and sell. Instead of tomato, we trade in Zomato. That is a definition we study in MBA colleges. As a trader, we know that there is another more practical, more real definition. You want to know that? Okay. I'm a professional trader, and let's say I approach one of you. Okay, I approach you and I say, ma'am, why don't you give me 500 rupees? You will say, who the hell are you? Okay, maybe she can give me a punch or so. All right. On the other side, if I stand here and I say, I think Reliance is a wonderful opportunity for so and so reason. I give you 5 reasons, technical, fundamental. I am pretty sure half of you will end up investing in Reliance at least 10,000 rupees. So in stock market, it's very easy to lure people to make investments. So the real definition of stock markets, everybody. For that, you have to understand that in stock markets there are crores of people. It's not that there are only 1 or 2 people who trade, crores of people trade. Broadly speaking, every participant in stock market can be divided into 2 categories. One is a retail trader, like majority of us. Like, what is the definition of a retail trader? You have some understanding of stock markets, maybe your friend, your father, mother, whoever has given you an opportunity, somebody came for an IRE talk or something, right? And you started opening an account and started trading. You typically do not have a very well developed trading system, right? And when things become tough, like a war or something, you start struggling. On the other side, we have large financial institutions. Who are large financial institutions? Anybody? FII? Zerodha is a broker. Zerodha is a broker. What did you say? Zerodha only, right? Who is a large financial institution? Like a mutual fund? Like a LIC? Like what Goldman Sachs could be? Motilal Oswal, HDFC Bank, even some ultra HNIs like Mr. Late Junjunwala. Right? These are all large financial institutions. Or there can be professional traders like me. I may not have thousands of crores in my pocket like those HNIs, like those institutions, but I have an equally developed trading platform or a trading system. I know which setup I trade, which setup I do not trade, just like they do. All right? In stock markets, it's a fact. Stock markets are random, it goes up, it goes down, but there are certain facts, statistical facts in stock markets. More than 95% of retail traders lose money in stock markets. Do you know that? Recently, there was an interview by Mr. He's like the founder of Zerodha. What is his name? Mr. Kamath. There was an interview by Mr. Kamath, and he said, he thinks the data is 99%. Data is 99%. So if you are a retail trader, you are trying to venture into stock markets without much knowledge, without practicing a lot, it's likely that eventually you may give up more in market than gain from market as a trader. Are you with me? You will give up more than gain in stock markets. However, if you are an institution or a professional trader, there is more than 95% probability you will end up making money. So what is stock market? Stock market is an official place where people who know about stock markets continuously take money from people who don't know about stock markets. Make sense, everybody? So if I ask you 500 rupees, you may say no right now. Come to stock markets, you will give me 5,000. All right? So it's an official place where people who know about stock markets, they legally take money from people who don't know about stock markets. So question, if you want to become a successful trader, on which side you want to be? On the left side or right side? All of you. You want to be on the right side. You want to be a professional trader. A professional trader is who? A professional trader is somebody who has a well-established trading system in place, who has tested it at least over a year or two in bearish market, bullish market, sideways market, has seen some major falls, major rises in the market. They understand proper risk management strategies. All right, that is a professional trader. So now that we have made a choice that in order to become successful in stock markets, we have to become a professional trader, we are ready to move forward. Now, whenever anybody approaches markets, could be an institution or could be even as an individual or professional trader, we have to analyze a stock. Is there anybody who has ever heard or never heard about fundamental analysis? Anybody who never heard? Your teacher is here, so you cannot say. I'm sure it's a subject for you. What about technical analysis? Have you heard about it? Ma'am, do you know what is fundamental analysis for everybody, if you can define? Corner, ma'am. This one, you. What is fundamental analysis in general, ma'am?
Past data of the company, suppose how first we start from industry, like what the industry is, then you analyze the market. If you are doing for company, analyze the balance sheet, cash flow, all the data of the company we analyze.
Okay, so you mostly talk about the finance aspect of it, right? To understand everybody, let's take an example of a kirana store. When you come out of your college, there will be some small petty shop, kirana store selling tea, biscuits, something. Let's say you want to do a fundamental analysis of that company. What all you want to know? Think about it. Any guesses? What all you want to know if you want to invest in that company? Quarterly result. Financially, how have they performed in past, like this ma'am said, is a good reflection how you can do in future. How you can do in future. That's one thing. However, if there are two shops who have similar finances, a shop which has a better location may have a higher chances. That's not a financial thing. A shop which has a better management, a shop which is selling a product which nobody else sells, may have some sort of patent, organization retention. If you are dealing in international markets, your local and international competition, government laws, foreign exchanges. So can I say that when you talk about financial fundamental health of a company, it is more than finance? In general, it is anything which can affect the valuation of a company. Does it make sense? Anything. Anything which can affect valuation of a company. CEO of a company quit. That also goes in fundamental only. What about technical? Anybody? Study of charts? Patterns. Who said? Patterns, is it? You said patterns, correct? Yeah. Anybody else? No, I just pulled leg once, not second time. So second time somebody else. Candlestick charts. What do you think is technical analysis, sir?
Also, and apart from this, there are a lot of indicators to use, moving average.
Okay. So, do you all know that stocks of a company, stock market starts at 9:15, goes all the way till 3:30 right now. 9:15, whatever is the price, 9:20 price will be different. Very likely. Has something changed about the company in 5 minutes? Has the company CEO quit, employee salary changed, project changed, client changed? Nothing changes in the fundamental of a company in 5 minutes or 5 days. But stock of a company changes every minute. Even less than a minute it changes. Why does it change?
The number of normal people like us who are interested to invest in that particular company's stock and the amount of volume that increases and increases.
Right. Very good answer actually. Very good answer. I'll repeat because I'm not sure if everybody heard that. Yeah, clapping. Very good answer. So yes, fundamental of a company doesn't change in short term, so fundamental analysis is more suitable for investors, long-term investors. But if you're a short-term trader, you're trying to time the market for today, next day, maybe for Diwali, 1 hour, those kind of things, you need to know something more or something different from fundamental analysis, that is technical analysis. And like the gentleman said, it's a function of demand and supply. Am I right? It's a function of demand and supply. If demand of a particular stock, if more people want to buy Infosys, it's likely Infosys is going to go up. If more people are likely to sell Infosys, it's likely it's going to go down. Next question, who can create huge demand in market? Financial institutions. That is where their role, understanding how financial institutions think, buy, sell, helps. Because they are the ones who are going to play with demand and supply in a market. There must be some reason why they are known as market makers. They can make the market. If a stock is coming down drastically, bad news in the market, and suddenly LIC says, oh, it's okay, Adani is my friend, I want to buy it for 20,000 crores, Adani will stop falling. In fact, it will start going up. Okay, so it was not a political statement. All right, yeah. So yes, that's the power large financial institutions have. So a bookish definition, what I've written over here, study of price action, human emotions, volume, is called technical analysis. In reality, understanding what institutions are going to buy next and at what price. Which stock an institution is going to sell next and at what price is called technical analysis. It's a game of hide and seek, ma'am. Have you ever played a game of hide and seek? It's a game of hide and seek. Large financial institutions, they hold it tight. Which stock are they buying? Which stock are they telling? They are not going to tell anybody. It's our job is to open a price chart, try to look at those patterns and figure out by looking at these patterns, okay, looks like this particular stock, this institution is going to buy at this price or this is going to sell at that price. They are like the boundaries. Okay. Okay. Now, let's understand how institutions think and work, everybody. So what do you see here? It is a candlestick chart. Is there anybody who is seeing a candlestick chart for the first time, or somebody who is busy with phone? Are you seeing candlestick chart for the first time, or have you seen before? First time, right? Yeah, so see, no? If you're seeing it for the first time. Okay. Okay. Candlestick charts. Ma'am, do you know what is a candlestick chart? Alright.
How do we know this financial instrument is selling?
We'll talk about that. We may not know this, but we may know some. Some of them are selling. We don't care actually who is buying, who is selling. We only care about demand and supply. Right? What's in the name? No, I'm saying what's in the name of that particular institution. You are Prakash, is it? Okay. Nice to know you, Prakash. Right. So, it's a candlestick chart. Now, we don't have that much time to talk about it in theory right now, but by end of this session, everybody, by end of the slide deck, I'll give you some reference material. Give 1 hour or 2 hours of your time. You will know candlesticks better than me. All of you. Alright? So, don't worry about it. For this discussion, understand green candle or green bar means prices are going up, red means prices are going down. Fine? Now, this is a daily chart, I believe, of a company called Hero MotoCorp. What does Hero MotoCorp do? A two-wheeler manufacturer, a popular two-wheeler manufacturer. They are actually doing certainly great in EV as well. Alright? So, however, as you can see, on daily basis, for 5 days stock goes up, then 5 days stock comes down. It's very hard to predict that, okay, this is a good company, why the stock is not consistently going up, consistently going down. One way is to get worried about it, feel the pressure of market volatility, right ma'am? One thing is to feel the pressure of market volatility. Other thing is, think about it, what if I knew a fall is about to happen? What if I knew market is likely to go up? That is the food. That is the food of a professional trader. We have to anticipate what is going to happen next, because I have to pay fee of my child, right? My child has to go to school. I have to pay 2 lakh rupees fees. It has to come from Hero MotoCorp or Infosys or somebody else. So I have to anticipate. I'm sure you have to do that as well. So what I'm going to do next is, now can you see there are two rectangles which are shown on the chart, on the same chart. So what I've done over here is, I have created 2 boundaries. I have created 2 boundaries, just like a boundary of this room. You cannot go below. Why you cannot go below? Because LIC says, I want to buy 2,000 crores worth of Hero MotoCorp. Every time prices come down, their order starts triggering. 20% order gets triggered, no sellers are left, prices bounce like a ball bouncing from here. So again prices come down, again it bounces. So what they have done is, they have created an area called a demand zone. An area called demand zone where demand exceeds supply. And when demand exceeds supply, what happens to price, sir? If demand exceeds supply, what happens to the price? In general, just think about it in general. Suppose, have you heard about green apple? Suppose on your WhatsApp, you see a message that green apple is a sure shot cure for COVID. What will happen to the demand of green apple? Do you think trees will start giving more apple suddenly? No. So what? So demand will be more than supply. What will happen to the price of green apple? Price will increase. Everybody, do I make a point that if demand is more than supply of a particular stock or a commodity, what is likely to happen to the price? It is likely to bounce and go up, and that's what we are seeing. If you look at this green segment, it doesn't look so green here on the projector, but if you see on this green segment, can you see how the prices are coming and bouncing? So as part of technical analysis, this is what is expected out of us. It is what is expected out of us. This is the hide and seek game. Ma'am, institutions were hiding, both of you, institutions were hiding their orders, but somehow we could figure out where the institutions are likely to buy next and where the institutions are likely to sell next. So every time prices go up to the supply zone, what you have to do is you have to look for a selling opportunity in the stock. All right, so let's see if I can do something about it. Okay, I may not be able to draw it over here, but anyways. So once you can figure out, ma'am, once you can figure out that there is a demand area in a particular stock, all you have to do is you have to place your entry line below the demand area, you put your stop loss line and put your target right before the next supply, and you try to travel through that journey. You come to office, then you come back home, you are 5% richer today. Come back next day, you are another 5% richer. That's how stock markets work. You don't have to do anything after you have figured out where is demand, where is supply in a particular stock. After that, you are not required. You are actually redundant. That is how passive trading really works. Everybody, are you with me so far? Now I really wish I could actually teach you in this particular session how to identify demand zones and supply zones, but we don't have that much time. So what I've got is, I've written some reference material towards the last slide. Again, if you give a little thought, maybe now more than couple of hours, you will be able to figure it out. That demand zone is not support. Many of you might be thinking demand zone is support. Demand zone is not support. Support was a yesterday thing. Demand is the new thing. We have to upgrade. Resistance was a yesterday thing. Today we talk about supply. It's a different thing. So I'm going to give you reference material for it. Now what I actually want to show you is, once you identify once you can identify how to identify, or once you understand how to identify demand zone and supply zone in a particular stock as a technical trader, life becomes really easy. These are some of the live trades I took with my students. I took it myself in my account. They are the ones which gave me my salary for month of September. It's a trade in Infosys. It was a long opportunity. I was expecting it to go long. So what happened? It's a daily chart, which means that one bar represents one day. I know well in advance, everybody watch it, I knew well in advance that if stock comes in this area, in this green segment, where is my chart now? If the stock comes in this segment, prices are likely to give a bounce. So I placed my entry, stop loss and target, and I went to my college, or I went to my office, or I went to train people, right? I have 5 more businesses than trading. I have to take care of them. So I already placed my entry, stop loss and target, and I was doing my own job while the stock came into my area, it got bought and it is moving in my direction. If I have taken a risk of 5,000 rupees, my reward to risk is 5 times of the risk. So by end of couple of weeks, I may end up making 25,000 rupees out of this position. It is an example of swing trading. When you say additional source of income, sir, it means that you are trying to replace a portion of your salary. Salary has to come every month, so every 1 or 2 weeks what income you get can be replaced by salary. So it's an example of swing trading where you are trying to exit every couple of weeks. It's an example of that. So in couple of weeks, somewhere between 10 to 20 days, I may get a return of 8%, which you get in a year in a fixed deposit. Everybody. I've got 4 examples here. Another one is a DLF trade. This is also an example of a swing trade where I'm anticipating that if I stay in here for a period of 10 to 20 days, I may get a 12% return. Now, how many of you do trade intraday? Intraday? Here is an example. So what I figured out there is a supply zone. Sir, what's your name? Sagar. So what I figured out, this is stock called L&T Finance Housing. I figured out there is a supply zone. Now I figured it out at 9 PM when I was sitting after, everything had happened in my house. I was sitting all alone, maybe with a cup of something, mug of something. Okay. And at that time, I realized that, oh wow, it looks like we have a pattern in which institutions are telling me we might be selling here tomorrow. In night only, I placed my entry, stop loss and target, and I went home, went to office or whatever I wanted to do next day. Stock gapped up, came into my area, and I sold right at top of the day, everybody. Do you see, this was the top of the day and it kept falling the entire day. I made 2.2% return in a day. 2.2% return in a day. And now I think I want to give it a break here, but do you understand now that why am I talking about that a combination of investment and trading? This is your journey. I'm giving you a roadmap to retire early, retire as ultra HNI. Everybody? That is why I'm showing you these examples, that once you understand this basic of demand and supply or technical analysis, it can make a big difference in your life as a trader. Any questions so far? Anybody? Any questions so far? Some of you have been trading.
In our class, we have a SAPM class. One subject is there, so in that subject we have traded in dummy account, money buy account. When I am seeing Asian Paints trend, whenever they declare dividend, the price will fall down a bit and it will raise again. What we call these trends.
Okay. So there is a question that looks like you guys have an access to a dummy account, dummy trading account. So do you get to track it on daily basis, quarterly or annually also? For assignment. So how have you been doing in that?
Invested everything, but I have got like 5
Okay, wonderful, right? So if you are trading in a dummy account, actually it is giving you some really wonderful exposure, and I envy you. Okay, I envy you. Now, I've studied in a college like IIM Bangalore, and this was not there. Okay, maybe time has changed as well. So I don't want to give complete credit to your college. Time has definitely changed. Okay, but yeah, they're doing a wonderful job. Now, his question is very specific. His question is that he has been trying to maybe invest in Asian Paints. Now, every time a dividend gets declared, we usually see that prices of stock price of Asian Paints come down. Do you know why? Do you know why when a company declares dividend, why the stock price of that company comes down?
Some people might have came for only the dividend and get back.
Okay, if I say that you have 5 lakh rupees in your pocket and you give me 50,000 rupees out of your pocket as dividend, will you have less money in your pocket? You have 5 lakh rupees of your pocket. Out of that 5 lakh, you give me 50,000 rupees out of your pocket as a dividend. Will you have less money in your pocket now than 5 lakhs? That's exactly is the reason. That company was worth, let's say 5,000 crores. They gave 1,000 crore as dividend. The company's worth is 4,000 crores. That is why the stock price of the company comes down when they declare dividend. But now why it comes back? Dividends, whether they are given out of pocket, whether they are given out of not pocket, profit, but it is still the valuation of the company. It is still money in your pocket, no?
Most of the companies are not giving when they are not making any profit.
Correct. So whether, what I'm saying is, whether it is coming out of profit, because it has to come out of profit only as you are saying, but it is still money in your pocket, no? If you are a company, so if you are giving me money, you are losing your valuation, and that is why the stock price is coming down. Now the next question is, why the stock suddenly comes back? Because many people now think that stock has fallen down, maybe it is a better value, and they end up buying, and they end up creating a demand. Now, very interesting question. Active or passive trader? Everybody, active or passive trader? Who is an active trader? Are you an active trader? You are an active trader? Your teacher is listening. Nobody should be an active trader in this class. Are you? But what is an active trader? Active trader is somebody who considers stock market income as their primary source of income. Alright? Somebody who considers stock market as their primary source of income. Sir, what is an active trader for you?
Active trader who is trading.
First line. Who somebody who considers stock market income as their primary source of income, right? Somebody who can spend 2 to 6 hours per day. If you are somebody like me who breathes stock market 24/7, I think about stock markets all day long. You are an active trader. Somebody who wants to earn monthly return of 3 to 7%. Obviously there is no upper boundary, but majority of my students I have seen, they fall in this category of monthly 3 to 7%. You are a active trader. For an active trader, you can be a short-term trader like intraday trader, somebody who buys and sells the things on the same day. You can be a swing trader where you buy and let the position mature in 2 weeks. Or you can be a long-term investor. You can trade in cash, or you can trade in futures and options or derivative trading. Do you know what is futures and options? Have you studied about futures and options? Little bit? No? Okay. So on the other side, who is a passive trader? Passive trader is equally powerful. Sometimes it is even more powerful than active trader. Okay? It is even more powerful than an active trader. Somebody who thinks that stock market at this moment of time is not my primary source of income. I've got a business, I've got a job. Still I can spend 2 to 4 hours or 4 to 6 hours per week. Majority of it is over the weekend, sir. Okay? Majority of that time is just over the weekend, because you are trying to analyze where Tata Steel can move next, where Tech Mahindra can move next. Alright? Now, a person who is a passive trader may have a full-time job, still can make somewhere around 1 to 3% monthly return. Still can make 1 to 3% monthly return on top of their salary. Salary is making sure there is a consistent income coming and capital is growing, plus you are making a return. And we all know 1% monthly extra return, how much money it made? It put us in a category of ultra HNI. Imagine after trading for 2 years, now you can get an average of 1.5%. After trading for 5 years, now you are getting 2% monthly return. Where will you be? You will be seeing 100 crore net worth very, very soon. Okay, that is the number we are talking about. As a passive trader, intraday is not really, doesn't have to be your thing. Some people can do it, but swing trading and long-term investments work really well. Everybody? So how many of you see yourself as an active trader like me who breathes stock market 24/7? Not you do? Okay. Not many at this point of time. I never saw it. First thing I did after I got my job was open a Demat account, and you guys are somewhere over there. I did not know at that time. I've worked for 12 years in corporate, and only after that I could decide that I want to become a full-time trader. Maybe you can do it in 5. So yeah, so being an active trader right now, if you don't have a family background, doesn't really work that well. So give yourself some time, build capital, gain some experience, and become a passive trader. So till then. Now this is my last slide, everybody. And this is how I want to wrap it up. When I was coming over here, there are a lot of beautiful quotes written all throughout your campus. One of the quote I saw was near lift. The bad news is time flies. Have you read that? What is the second part of it? The good news is you are the pilot. You are its pilot. So the key in stock markets, key in building a fantastic career is starting early. That's what it said. Have you heard about Warren Buffett? People say that he is one of the best investor ever born, etc., etc. There are so many studies which says the best part about him is he is 95 years old and he's alive. Because he started early and he has been investing for last 85 years. He started at the age of 11. So starting early is real deal. 22 is not far from 11. Everybody, you might be somewhere around that or not, maybe 23. All right. Now what I've got here for you, everybody just watch this. What I've got for you here is, I think I kind of told about me. I'm a full-time trader. I trade for myself. I trade for my family. I also offer some sort of consulting to different institutes. Whoever I've ever studied from, I actually teach for them because I get to talk to people like you. This also helps solidify those concepts in my mind. So what I put up here is one of those institutes. Its name is Sher Khan Education. Now why have I got Sher Khan for you? Because it's not something I'm trying to sell or something, because I don't belong to them. I'm a freelancer consultant. I work for anybody. But why have I put them? Sher Khan Education is a BNP Paribas company. It's a Fortune 500 company. It is one of the biggest stock market training institutes in India. Do you know that? They have touched lives of thousands, if not lakhs of people. We have thousands of active professional traders with us. Sher Khan Education not just teach, but it also is known to hold your hand while you learn to run or walk in stock markets. That is why any of their courses, whether it's a small course because you are just an enthusiast in stock market, many of you might just be an enthusiast right now, or some of you may have a goal to breathe stock markets like me one day. I got 11 courses right here for you. One of them may suit your need, but remember, each of these courses is at least 1 year long. I may teach you for 1 month, but I will mentor you for next 11 months. This is where I hold your hand and help you walk and run in stock markets. It's not like a college that for 1 year you have to come to my college every single day. Maybe I'm asking is 2 to 4 hours of your time per week for next 52 weeks. Everybody, that's what it takes to create that wow career. Look at that ultra HNI goal, retire early, have that car, have that house. That's what it takes. So it's a snapshot from their website, sherkhaneducation.com. Unfortunately, it's not really visible in your auditorium. But what I've got at the bottom, is it visible? It's my contact. First one is my contact. Second one is my team's contact. The first one is Ankit.Rustagi, RUSTAGI @sherkhaneducation.com. It's a place where you can send me an email. Why would you send me an email? Ankit, I have a question about a particular stock, Asian Paints. Ankit, I want your help to help me build my career as a trader or as an investor, or I want to look for an internship. I don't know, whatever. Whatever you think I can help with, you can write me an email. I also have given my LinkedIn handle below that. Now, I totally encourage you to take one more step. Everybody, I still encourage you to take one more step and give a call to my team. He's Mr. Amrit. His number is 90-198-44962. He is Center Head Bangalore for Sher Khan Education. he will definitely, he's a wonderful person, he will definitely like if you give him a call and try to explain your needs that, you know, Amrit, this is where I am, I'm a student and this is what I want to learn. It could be of academic interest, it could be of financial interest. Whatever you want to do, definitely he would like to host you in his office for a cup of coffee and help you out with it. Okay, it's not that you have to join a particular course, because when this is an institute, you understand education institute is not just for profit but also to help you find your way. It's also to help you find your way. So with that, I would like to wrap up my discussion and I would like to open for questions. You have been a wonderful audience. I've got some reading material if you are interested. Maybe you can take a picture of that as well. So there are 5 books I've written here. I have not written here. I have put their names over here. Each of them is my favorite, and somewhere each of them has has some sort of place in building my career as a trader. Okay, each of them has made a difference in my life as a trader. Anybody has a question? Anybody has a question or a feedback? Okay, how many of you would like to take one more step in stock markets? You want to do that? 1 second, I'll just. Okay.
So there is a term called hammer and CAT.
Ha. Right. Yeah. You know, what is your question? There is a term called hammer in stock markets. What is your question? Right. So can I use this board?
Yes, sir. Sir, actually, is there more that you used to incline towards real estate?
Shall I repeat my question?
You just said a statement. You never asked a question. There is a term called hammer in a.
Sir, I asked what it was talking about.
Ah.
So there is a term called hammer in the candlestick. So I wanted to know what it means or what does it mean.
Okay. Now, everybody, there is a question. What is your name? Sandeepa. Okay, there is a question by your colleague Sandeepa. She's trying to ask you, there is a term called hammer candlesticks. What does it mean to us as a trader and how can we use it? Anybody wants to answer? Traders, come on. I can do it. I can use it here, I think. Will it work? Okay. So a candlestick looks like this. There is a big thick portion and there is a thin portion of it. Alright. So if a particular stock, let's say, is trading at 100 rupees, everybody, if there is a stock trading about 100 rupees, market opens and this guy starts falling and falls, 5% comes to 95. Let's say it is 1 o'clock and suddenly something changed and it started recovering. Maybe it got its protein shot for the day. It starts recovering and closes at 102 or 105, whatever. Okay. Now I want to ask you, is it a bearish movement of the stock or a bullish movement of the stock? If I ask you, okay, guess what can happen after this? Is it more likely to go up or come down? It is more likely to go up. It just stopped going up because the day got over, 3:30. Looks like it could have continued going up. Whatever bearish pressure was there, whatever is the reason, demand came back and beat, like India is going to beat Netherlands or whatever team. So demand demand did beat supply by huge margin. So if you convert this kind of a price action in a candle, what you get is a hammer candle. So a hammer candle means there is a small body, there is a long wick on the bottom. If a long wick is on the bottom, we say it's a bullish candle. At the same time, if you have a body and a big wick on the top side, it's a bearish candle. Usually you use these candlestick patterns in technical analysis and predicting what may happen next. Alright. So the first book you see here, Sandeepa, first book you see here is called The Candlestick Trading Bible. He is the person who invented candlesticks. Okay. One of the really nice books you will ever come across. about candlesticks and trading in general. So go read it. Any other question? Okay, sorry.
Could you suggest a good platform or means wherein I can study and understand how to analyze the candlestick patterns?
So I kind of answered that question already. What he's asking is that is there a particular platform where he can understand candlestick patterns well? And maybe the question is slightly different because candlesticks you can learn from this book. The idea is how to apply this in a particular platform. So there are multiple platforms available in India. Now if you choose to join Sher Khan has its own platform, it's called Trade Tiger. Now Trade Tiger is a very advanced platform. It identifies demand zones and supply zones for you. You open a stock, you open Infosys and it will tell you where exactly institutions are likely to buy next, where institutions are likely to sell next. However, you can also use platforms like TradingView. Screener also you can use, right? There are multiple others are available, right? Now TradingView and Screener may have a free version and a paid version which may differ, but a broker like Sher Khan may have only one version for you. So may give you every feature free of cost as part of your joining the account. Any other question? Yeah.
Hello sir, so how do you see the growth of algo trading software for future investors in the near future?
Well, if I say no, I must be lying. I must be lying, okay? Because time is changing and time has come where we don't do hard work, we only do smart work, right? Gone are the days where we used to manually analyze things. 6 years ago when I started trading full time, I have been trading almost for like 6 plus 12, 18 years now. I started very early, like I was of your age at that time. That's when I started trading. It used to be completely manual. I used to take hours and hours. Same thing I can do now in 30 minutes to 1 hour. That kind of tells me what is the power of algo trading. So algo trading is next big thing, or it is a big thing right now? Good question.
Nowadays we see many candlesticks, right? So from one candlestick, the other candlestick, how we can different?
Means?
How we can form one candlestick to another candlestick?
How?
Candlestick, we see different candles. So from one candle to another candle, how it will be formed?
Okay. What is your name?
Ganesh.
Sai Ganesh, huh? Okay. So, Sai Ganesh, good you asked this question. And if I look back on my own life, okay, Ganesh, I never thought I could ever have a confidence to stand in front of this big crowd. Okay, I never thought I will ever have a confidence. I studied in a government school. I didn't know how to speak in English. Okay, I didn't know how to speak in English. First job when I got, somehow that interviewer was impressed by my technical skills and he took me as an engineer. One day that person asked me, Ankit, can you attend this meeting with a US client? I said, sir, I can understand, I can do things, but I don't understand what this guy says. I cannot understand what these people speak in English. From there, I have come a long way, so will you. Okay, so will you, so will each one of you. So will each one of you. Okay, it just takes, that if you believe in it, job is half done. That was another quote I read on the way. So yeah, I remember things. So his question is how multiple candles are formed. So each candle has a particular duration. Like if I've opened a daily candle, which means that one candle will show me the price action for 1 day. Next day when it starts, it will start forming as the next candle. But if I open a 5-minute chart, every 5 minutes new candle will start showing the price action. So it depends upon you as a trader what you ask from your chart. You can open any type of candlesticks. Okay, any other question? So the question is, how much tax do I pay? So taxation as a professional and as a person who has a job is different. When you have a job, your company deducts tax and then give you whatever is left. But when you are a professional, when you are a self-employed person, you get the money, you spend as much as you want, whatever is remaining you show as profit and you pay tax. That's how I pay tax. Mostly I don't pay anything. Mostly I don't pay anything. Okay? My wife earns less than me, she pays about 5 lakhs tax per year. She earns less than me. Any other question? Okay, so how I became a full-time trader, everybody? Partly there was a need, partly there was a coincidence, partly there was a planned thing. I started investing very early at the age of 22. At the age of 30, I had enough money in my trading account I can buy a house, and I didn't really know about it. Because I started early and power of compounding really helped me, and I had 75 lakhs in my account with an investment of 15 lakhs. Suddenly I was rich. At that time I could buy a house. Not now, but at that time I could buy a house. So that's the coincidence part. Second is, I started early and I was reading books, I was accepting my failures. There is no success in first attempt, in almost anything. I was working on it, getting failed, working around it, coming back to the stock markets. Are you with me? Third thing, need. I just became a dad in 2017, both me and my wife working, and we were struggling to manage a kid at home. So she said she doesn't want to quit because it's very typical of a mother to quit. I said I would like to quit because I have prepared myself for last 10 years to become a trader. I want to use this as an opportunity so that I can tell world. Trading, nobody accepts. I couldn't tell my parents that I have quit my job, become a full-time trader for 1 full year. My wife couldn't tell it for 3 years to her parents. Okay? Yeah. Any other question? I think we'll wrap up. Okay. Yeah. Thank you so much, everybody.